All right, guys, as you can see, I'm not in my regular studio. I made it out to Hawaii. I'm getting myself situated. I'm going to be here till the end of the month, but I am going to stay plugged in on sharing stock setups, trade alerts, and things like that. This is the Stocks with Josh show, and I've got a couple stocks to go over with you guys today and a couple thoughts on the market overall. Guys, this week it's going to be a choppy week. It's going to be a volatile week. And I see a consistent theme in a lot of the stocks that I've been charting. And you guys hear me talk about it, and it's price compression. The trade range that we're moving in on some of our favorite stocks, Tesla being one of them, Eli Lilly is one I've talked about in the last 3 videos, and I'm going to cover it again today. We have yet again closed another day in the exact same price range that we've been in for days, and that's a sign that we're getting ready for a massive breakout move. Now, I do favor it going up. I favor going to the long side, but we've got to be very strategic because it's going to be very choppy. And we've seen today on a couple of our favorite big tech stocks, we've seen violent moves down and very quick recoveries back into the same price range. I'm going to point those out to you guys in the chart, and you guys maybe can see that we are setting up for a big move. What's going on this week and what the market's waiting for is direction from the FOMC. There's going to be a statement released Wednesday. We get the CPI data tomorrow in the morning. The market's going to react to that, but it's going to be a choppy day. But the real direction's not going to be set tomorrow. The real direction is going to be set based on the FOMC notes and statement that are made on Wednesday. And then we've got another big data point coming out on Thursday, and that's retail sales. And we know that that's going to give us a very good indication regarding inflation as well as the overall sentiment of the market, whether we are moving towards deflation, whether we're moving towards the potential of a Fed rate cut. I've told you guys before, the market's expecting the very first cut in March, and if it continues to get commentary from the Fed and from the Feds that that's likely, it can continue to rally all the way up to that point because the market will do well. Stocks will do very well. If the Fed begins to ease up on interest rates, it should give a continued rally. Guys, you've also heard me say that we're also dealing with the fact that we're moving into an election year, which typically is not a bad year. But in past experiences with election years, they've been very volatile. High choppiness. You want to be looking for deals. You want to be looking for opportunities, or just avoid the markets altogether until the market tells you which direction it wants to go. Largely, that's going to be my biggest recommendation for today is keep your position size smaller and wait until the market gives us a full read and the FOMC commentary on Wednesday, and then let's just go ahead and get that retail sales data as well, and that's going to give the market a ton of direction, and then we can follow along from there. Okay. First stock I'm going to cover today is one that I've been covering, but it's worth us keeping an eye on, and I want to show you how it's performing in the charts and let you know that I think it's getting ready for a pretty big move, and that's SoFi. SoFi is getting very, very interesting. So I'm going to go through a series of bullish technicals that I want you guys to see with your own eyes. The first one is that the 8 EMA is above the 34 EMA, which is bullish. For as long as we stay above that 34 EMA with the shorter time frame EMA, we're in an upward bullish trend, and right now it's bullish. Now, the other dynamic is that you want to look at that, and you also want to look at the 200-day moving average, because if we were beneath the 200-day moving average, but the 8 was above the 34, that wouldn't be very bullish. It would be momentarily bullish. But you want to be above the 200-day moving average with the 8 above the 34, and it tells you that we are in an uptrend. And so I want you guys to know SoFi currently is in an uptrend. We have a buy signal on the charts when looking at the Lux Algo indicator. And one of the other things that it has achieved so far in 2023 is it achieved a new 52-week high, and that's very important because it gives us the sense that we are not under that descending line of resistance from 2022 that some stocks have never recovered from. Not trying to throw anybody under the bus, but we know NIO is dealing with that. They've yet to have a breakout moment and make a new 52-week high in the last year. But SoFi has, and so that's a bullish sign for it. That local high was $11.70, and I believe that we're getting ready to go back and test that. Now, that might end up being a double top, but I think at the moment we are moving towards that, and that's why this stock has been of interest to me. I also want to point out, if we take a look at the last year, that we've been consistently making a series of higher lows. Once at $4.24, the next time at $4.45, and recently at $6.41. And I'm going to tell you that as long as we stay above that last number, we are definitely still in an overall uptrend. Now, the other thing I want to point out is a little bit unique. It's an bullish inverse head and shoulders pattern, but is ascending. And so that's a little bit of a different inverse head and shoulders pattern. Normally they're more horizontal, but this one's ascending. And I think that if we get above that $11.40 range, that is sort of the neckline from an angle. And so I'm also keeping a close eye on that price point, because if we do get that breakout, then this could go all the way back up to $20. Now, I'm not predicting that this will go to $20. It has to take each level at a time, and that's exactly what I'm going to give you guys now. I'm going to give you guys some important levels, because remember, we're looking for maybe a quick, better price on SoFi before it moves up, because right now it's just chopping up in this tight price range, waiting for the FOMC like a lot of other stocks. And so here's the price points I want you guys to keep your eye on. This could pull back between the $7.50 range to the $7.70 range. And then after that, I think it would quickly shoot up $2, possibly even by the end of the week or the early part of next week, getting us to $9.50. But I want you guys to see that the fair value price right now, that's sort of the line in the sand, for SoFi is $7.50. And so when it's below $7.50, it's kind of in bear territory, but when it gets back above $7.50, it's back in the hands of the bulls. And so watch that price point in particular. But here's what I've got going on. I'm in SoFi right now. Stop loss is currently set at $7. I think that there is the potential that it could flash down as low as $7.17. Now, there is no guarantee. This thing, we could get that good data Wednesday and Thursday, and this could be off to the races. But I want you guys to, maybe you might consider being in a position that if it did come down and flash touch those lower price ranges, maybe you could be in a position where you would buy some. I'm going to leave some money on the sidelines to see if SoFi can come down and touch those prices. The very best entry that I'm specifically going to be targeting is a touchdown to the $7.30 to $7.20 range. Guys, this is the trade of the week. This is the one I'm trying to make a few bucks on going into the end of next week. It's not an options trade, so it should be a little bit easier for some people. This is not a recommendation for what you should buy, sell, or hold, but this is the trade for the week that I'm focusing on. It's with SoFi. All right, real quick station break. If you need better trade tools, check out the offer from the Moomoo Investment app. These guys are a zero cost to trade platform that's giving away free stock. But if you just want to accumulate some cash and park it on the sidelines, they're currently offering one of the highest interest rates for just parking your cash at 5.1%. Click on the link to get the offer for yourself. It's available in the US, Australia, and Canada, but each location has its own offer. So click on that link and look over the details and see what free stock you can get and start trading with better trade tools. All right, I wanted to briefly touch on a couple more stocks. Eli Lilly, only just to point out something to you guys about the price action. We had a fake out both to the upside and a fake out to the downside. And on Friday, we closed right above $598, and I think it was $598.05. And so that's one of the worst confirmations you can get. We're always looking for a close on the daily chart, but when it creeps up and closes right at the close where you want it to be, you also want to see within the first hour of the trading market the following day that that price point will hold, and it didn't. So that was a fake out. And then all throughout the day, it came all the way down and broke beneath the bottom price that I gave you guys of $583, but it recovered back above it, and so it was a fake out to the downside. Just like I was saying, big tech, some of our favorite stocks are just compressing in the exact same price range that they've been in for days, waiting on data. The Eli Lilly play is still in play, and I'm watching it very carefully to see which direction it's going to break. And let me give you one additional indicator on Eli Lilly is that the candle that we got had a really tall tail or wick at the bottom, which was actually a bullish indicator. And so if I'm going to lean one direction or the other, at the moment, it potentially leans for a breakout to the upside. So keep your eye on Eli Lilly. All right. Tesla. Got to briefly comment on Tesla because it's really doing the exact same thing as Eli Lilly and a couple of these other big tech stocks. It's compressing. And again, it's compressing in the same price range that I gave you guys between 238 and 242. It hasn't chosen a path, but similarly, I lean towards believing that it's consolidating at a range where it's building a base for a push up to 262. That's what I'm expecting, and that's how I'm going to trade it. Now, over the next couple videos, I'm going to be talking about some crypto. You guys know I'm deep in a SHIB and Dogecoin swing trade. I'm also watching Bitcoin very carefully, and I'm going to tell you right now, the charts lean bullish to me, but I want to show you what they have to do before they continue to break higher. Hit that subscribe button if you want to follow me on my big SHIB and Doge swing trade. That's it for today. Peace and blessings. Look forward to talking to you guys soon in the next video. Take care.